No. Hi everybody, let's get going. As it's a bank holiday, let's keep this nice and short. So let's just get going. And I want to address this question about where these indices could go, which we do every week anyway, but let's just look at it with extra sharp eyes. And you can see that we had 2 weeks of just going nowhere on this NASDAQ. So we've just hit a wall on this 14,000 and closed narrowly underneath it. So if you've got a situation where a market is hanging, it's somewhat harder to call. If you look at the stochastic is high, it's a strong market. For number one, it's US jobs on Friday, so I think at the very least we need a pullback. What I would suggest is the most likely scenario is we will see a pullback, some potential selling in the first half of the week, and then if the market likes the job numbers, then we could pick up and start to wind higher. If we close badly on Monday, what does close badly on Monday mean? Let's look at it technically in terms of the daily chart. So you can see we are really, we're definitely struggling up here. In fact, I'm going to take that off. So we've closed, we're just about sitting on this February high. We've had 4 days of lower closes, and all we've done is come back into this 23rd of April range. So if we basically, on a pure technical level, and another lower close could seal the fate of this NASDAQ and drag it down. I think the most like I said, if the bullish scenario plays out, then I think we could come to the lows of 2 weeks back, which is not that far away. That's not that much of a dip, and then potentially fire up on Friday. So bullish scenario is pull back and then start to wind higher. The bearish scenario is we do another lower close, retreat back to this 13,900 and then start to really wind down. But ask yourself this: if this market is that bearish, if this market is due a significant pullback, why is it not closed much harder and much further into this 13,700 quicker? So you've got to ask yourself the question, if it's that bearish, why are we just sitting up there and drifting? So if the answer to that is because we're so bullish, then it's got to be the bullish scenario where we get a deeper pullback before we get the next lift. So you can see there is some no, actually we're not divergent. That was a new high. That was a lower at the high. So all this indicator is doing, doesn't matter what this indicator is, RSI, stochastics, whatever, MACD, doesn't really matter. It's indicating that the market is strong, has lost some short-term momentum, and could see at the very least a further dip. But overall, the market is intact. The bullish sentiment on a purely technical level is intact. Now, I do not know where this market's going to close tomorrow. Neither do you, nor does anybody. So all I can do at the moment is look at the technicals, look at the charts, and give you an experienced eye on it and tell you what I think I'm seeing. If you look at what happened here in February, the difference between February and now is this. In February, we had a significant run up. We had a new high and an immediate close lower. Here, so the fact we closed lower from the new high was the bear signal. When we made a new high here, we did close lower, but we didn't engulf this price until 2 days later. So that was a sell signal, and this was potentially a signal to tell you that we would pull back, because that engulfed, that didn't. So you've got to say on a pure technical level, yes, we are closing lower. Yes, we are not holding this level up here at the moment, and we look as if we can easily come down to this 700 level. If we close underneath that, then yes, expect that to topple. And there is something of a distribution pattern about it that you can see from the fact that we've got we're getting lower highs. So short-term bearish, longer-term bullish. Let's look at the Dow. Dow is sitting up higher. But we are just in a tight range. Ever since we came up there on the Friday the 16th, we've got in a tighter and tighter range. So at the very least, in a bullish consolidation, you will still need a dip to get this market going. You could come all the way down to something like 33k onto that high, come into this trend line, and then still potentially get this to push up. If it's that bullish, you won't get that far down there. You'll get a dip back into, say, 33 and a half. But at the very, I would have to say, short term, we definitely look as if we need a pullback, because the momentum's gone. And the best way to get momentum back in the market is to drag it down and see if there's more buyers down there. So short term, lower. But just watch out, if we close underneath here, then yes, we could be looking at a deeper pullback. And yeah, there is something of a distribution pattern up there as well. Okay, so let's look at the European indices as well. Let's look at DAX. I didn't realize it until today, but my daughter, who lives in Berlin, says there's actually a curfew in Berlin. Well, I presume it's all over Germany. There's actually, not only is there lockdown restrictions, there's actually a curfew. So hardly surprising that this one is dipping under the circumstances. So again, but look how, you know, they couldn't bring this market down. They couldn't drag that down to close underneath that little trend line. So despite what's happening in Germany, all we're doing is consolidating. So this could easily dip to 14.9, not very far away. And still be bullish. So again, you got us, the fact we close lower So we only closed lower back end of the week on this one. FTSE is, of all of the indices, this is the better one. Even in the US, I keep hearing the financial media talk about how UK is the one to invest in at the moment. And having said that, the bearish sentiment in the UK is the fact that look at this big hard sell on the 20th, and we are still inside that bar. There's the range from the drop on Tuesday the 20th, and we were not able to close above that. So whichever way we come out of that, whichever way we close either side of that, which is 7,000 at the high and 68.50 at the low, whichever way we close out of that, it's going to be the direction for the short to medium term. Right, moving across, let's look at the volatility. Let's look at a couple other things. The volatility index is higher. So, yeah, the volatility index is potentially, I was going to say breaking out. Is that the right term? Let's have a look. Certainly decision time. And this is is a good healthy indicator of what you might be expected to see. You're seeing a slight increase in volume and some higher highs on this volatility index, so that will suggest there is an issue with the market. Dollar, and there's what's going on. Dollar's picked right up. So that's potentially taking some steam out of certainly the US markets. This brings relief. This is one of the reasons why I would suggest that the DAX is holding up, because if the euro is getting weaker, if the euro is getting weaker, that's good for German profits. So because so many of European companies, on the big companies trading dollars, have businesses that rely on the dollar. So if the dollar is getting stronger, that's great for Europe. It's not so good for the US. 10-year notes, flat to higher, which is healthy. You need a good debt market. If you've not got a healthy debt market, then you've got problems. So it's not, to me, the main problem with if you see a rising dollar and a rising bond market, as long as the gold market doesn't shoot up and the indices hold out, then you're okay. If you get to the point where the dollar, the bonds, and the gold are firing up and the indices are closing lower, then hold on to your hats. But at the moment, you're seeing a pullback in the dollar and a sustainability in the 10-year US Treasuries and indices that are certainly weaker, but not at the moment not selling off. But let's face it, I mean, the market's had a good run. This is cyclically a period where you see profit taking. So if you've got profits in some stocks, it's all a question of how you decide you're going to manage your risk. That's, as with any trading on any day of the week, on any day of the year, risk management is the foremost issue in anyone's trading, or at least it should be. So, bear in mind what I've just said about the fragility in the indices. and the increase in the volatility index and the dollar, you've got to make some decisions about what you're going to do with your portfolio. Right, let's start moving across, because I want to keep this nice and short. Gold sitting right on us on support, but closing lower. At the very least, I think we need a dip into this 1730 area. So I'm bullish, but I do at the moment see that pulling lower before that goes to that. So I'm seeing it come to the bottom of this channel before it goes and tests the high. I could be wrong if we start closing above 1780 in the first half of the week. Right, silver. Holding up, but looking as if that wants another pullback. Right, let's look at oil. Sitting above that trend line, so it's broken out from this pattern. This is potentially a healthy oil chart, because we've broken up through that trend line. We're now kissing it and sitting on it. If we come lower but then subsequently close higher, that's very bullish. I expect to see 68, potentially 70 in the back end of the week. So again, short-term weakness, but if we stay under here, don't buy. If we close immediately higher, that's bullish, and look for a move into the back end of the week into US jobs. Right, copper. Copper is sitting up, but looking, as with everything else, looking fragile, looking as if it needs a pullback. So copper could come all the way back to 95, and still be holding in this bullish range. Grains are doing incredibly well. Now that is real relative strength, because you've seen, you know, a lift in the dollar, and you've seen a lift in the beans on the same week. That is really bullish for the grains. Same with, I mean, these grains are just on a roll. This wheat is not pulling back. That could come all the way back to $6.90 and then start to make another ascent. Very, very bullish on commodities. We're in a commodity boom, hence the significant commodity boom. Based on, one of the reasons is the fact that US is, as we know only too well, the US is just printing money at a colossal rate. Right, stocks. Let's have a look at Apple. We never really look at Apple. So there's Apple having rejected 138, 139. So hardly surprising that some of the indices are dipping, if you think of the scale of Apple. So Apple is looking like it wants to see 129. It's possible it could come right into 125. That is actually on Thursday. That's a sell signal. It's a short to medium term sell signal on Apple. They've got problems with the chip production is cutting back their manufacturing. Such a shortage of chips, microchips, that the production is being cut. So obviously that's going to eat into profits. So a new high in this run, immediate close lower. So there are definitely, that's a key warning signal. If a bellwether like Apple can't hold up, then that does spell that could be giving us the heads up about the rest of the market. Anyway, so Apple could come all the way back to 125, as long as it holds this area here and then could start to wind up again. Well, I'm suggesting that Apple could come back to at least 125. And if 125 doesn't hold, then it could come all the way back to March lows. So if I do this, let's look at okay, let's just measure the last move, last main move, which was November to January. So there's your 126 is 50%. The main support's down there at 120. If this Apple really lets go, it's possible you could come all the way back to 115. Possible. I would thought it's high probability that you'll see 125, 126 in Apple. Let's look at Tesla. I'm staying on the US stocks for now because what the Nasdaq does, the rest of the market follows. Let's have a look at Tesla. Tesla has a potential mini buy signal, but it's vulnerable. Oops. Tesla's in the S&P 500 index now, so what happens here is more crucial. Right, so we could easily come back to 638 in Tesla. As long as we hold and close back inside 650, we could start making our way back to those highs. So in theory, Tesla is a buy here about 700, 710. Tesla had results, didn't they? What was the results? I've forgotten. I think it's not about how much money they're making, is it? It's about what people are prepared to pay, supply and demand for the stock. Yeah, 438 million, yeah. Surges by 74%, yeah. But it's about what is supply and demand for the stock, isn't it? That's why we look at charts. If the demand for the stock is good, yeah, that 650 level there is 650 is a key level of support. So far, it's not touched 650, but yeah. So as we stand at the moment, 685, 690 is a buy, but if we close underneath 650, then that's had it. Short term had it. Right. Let me look at I'm going to speed things up because I'm just going to look at my UK list from afar without dragging you all through it. And I'll rattle off what I'm seeing in the UK list, and I'll talk about my current list. Quidel, we talked about, is closing lower, so I'm not interested in that. Right, let's go through the UK stocks. BT is breaking out. That's up at 160 plus. If you looks as if broken through a major resistance area there. I think the next stop is about 180, 185 on BT. Rolls-Royce, still dwindling. Still only just above the £1 mark, but I suggested 102, 103 was a buy. We're currently we closed at 104.60. POG is pulling back but closed at 25.70. IQE is still in a tight range. Let's look at IQE. So we bumped into 64 and spent. So it had a bad week. If you look at the weekly. It's potentially just consolidating, potentially, but the jury's out. If we close under 55, then that's lower. At the moment, volumes are not great. They're reporting this week. Yeah, I think you're right. I think it's a waiting game. If you're a long-term investor, and keep your stop out of trouble, could still dip to 55 as long as we don't start. Obviously, the big 50 is the main number. As long as we hold above 50, I think the chance of that going higher is good. Right, I'll continue my blast across. Andy's John Wood keeps closing higher. That's 282. Here's Avast is flat at 480. Right, flicking across, we've got Hammerson just under the 40 mark. Tullow, yeah, Tullow's had a squirt. Obviously, we talked about the strength in the oil, and again, oil's got relative strength, increase in the dollar, but with the oil holding up. So we closed at 55 on Tullow. Tullow it's a good stock, but it's pricey, relatively expensive. Sage sideways. Money Supermarket. Let's look at Money Supermarket. I'm talking about this one for a while now. That's the weekly chart. We closed higher on the weekly. Drop down to the daily. So this trend line support down here held really well. So that dip into 255, 256. We closed at 272.40. Any pullback to 268 now, in theory, should see us climb to 284. I'm looking for it to get back to the highs. Right. I mean, towards, as we get to the back end of the year, I'm looking for that to get back up to the highs. Just flicking across, SSE's gap filled holding up. Where's some other UK? 88 Energy, 88E. Yeah, this is another interesting stock. This is one of Andy's again, isn't it? Just double check. I'll make sure I clicked on the right one. I think it's a great stock. If you're in it and you're in profit, then hang on. I still think you might see a lower number. Whenever you get a massive breakout like that, mind you, a lot of buyers came in at that 89. That one down there. Put it this way: if that comes down to that 118, then I think that is still a buy. I think that I would hope that dithers before firing up. Why? Because then you get a better chance to get a nice price. PAF. PAF doing. Let's look at the miners. Yeah, so this looks as if that can do 25 again, maybe lower, as opposed to Pan-African, which is actually looking healthier. That's a lovely pattern there. You've got a head and shoulders pattern there for you. Shoulder, head, shoulder, close. This is still viable. You get 1750. We look as if we can come and see 20 soon. That's holding up very, very well. So as opposed to POG, which is still messing around. Right, other stocks. Anything else you want to look at, shout now, because I'm about to zoom off. Zoom off. I was looking at Megit, but that's not doing anything. Yeah, things like eBay. eBay is looking ill. Zoom is closed lower back in last week. The so-called growth stocks like PLTR is weak. PayPal's doing okay. Taiwan stocks? No, I haven't got time to look at Taiwan stocks. Discovery. I'll look at it. Yeah, I've tracked Discovery in the past. Yeah. I'll take a look at airlines. God, that went on I was right up there at 78, and it's pulled right back. That's wow. I would have thought that would drift back to 35, 36. But yeah, that's definitely one to watch. This is a real plunge back here, didn't it? That's quite a dramatic drop. But we're seeing this in a lot of it's almost everything got pumped and dumped. A lot of the good tech stocks and the so-called growth disruption stocks have not fared well. Yeah, possibly. I mean, there has been one of the okay. Oh, right. Okay. I didn't realize that impacted on Discovery. Thanks for that. Well, I tell you what, that in a way that could mean that this one is worth picking up. I'd forgotten it was tied up in that. Right, let's have a quick look at airlines. I think airlines are a good one to look at. Let's have a look. Any other miners? No. Well, Fresnillo is not holding up. Fresnillo is looking a bit quite ill. Polymetal. Wow. That's had a look at that. It's gone right into that trend line at 1632. And here we are at 1500. So if I pan back from that, you can see why there's a lot of profit taking up there. And as I said quite early on in the presentation, it is that time of year for profit taking. Airlines. Where's my airline list? This is you. Let's look at. Okay, there's EasyJet. Actually holding up quite well. Delta. Close to the highs, holding up well. IAG. holding up. You've got JetBlue, so they've all got the similar pattern. There's Ryanair. Ryanair's very close to the highs. The airlines are doing well. Well, tell you what, I mean, that's a healthy indicator. United Airlines. Okay. Anything else you want me to look at? Because I am going to disappear now. So look at skills. Okay, it had a big burst and fell back into that support, but PLTR is not doing it. That's horrible at the moment. Fubo had a burst and pulled right back again. Let's look at the curiosity stream. Bristol Myers, wow. I'm stopped out of Bristol Myers with profit. Now that is worrying for a stock like that to suddenly. I'm guessing that's earnings. GSX, what's that? Right. You know what? I would be personally, my way of handling a situation like this is to say to myself, right, if that closes above that area there, I'd buy. So I'd rather buy this higher than jump in now and risk this falling back through 24. It's a very interesting stock, so I will keep hold of that. What's happened to this? That's a massive drop. It's gone right up to 150, and here we are at 32. You could potentially be holding a falling line. Oh, is it? Oh, that one again, that issue. Okay. So I'm just writing some notes here. Hang on. Right. Well, if that's the case, then in theory, this is a good buy. But it's got to prove itself above that. It's got to close above that 35, 36 level to prove that the buyers are going to hold that up, that the market is going to hold that up. Right, what else have I got? PayPal sitting up but looking a little lower. Right, okay, I'm going to leave it there. Thanks for your company, guys. I'll be doing a midweek review 6 p.m. Wednesday. If you haven't got a link, look on the Trade Easy Way website. Thanks again. Thanks for your time. Thanks for your input there, because a couple of really interesting charts there that I'll be following. So thanks very much, and enjoy your day off tomorrow if you are a Brit, which I'm guessing most of you are.